Hey, everybody. So we're going to get started here in a minute. Let everybody file in. It's good, Brandon. How was yours? Can everybody hear me now? Hey, Donnie. Hey, Fernand. Hey, Kevin. Hi, Susan. So let's start here in a minute. I'm going to give it one more minute to see who trickles in, see if we have any latecomers. Okay. Hi, Emily. Hey, Stefan. Okay, cool. So I figured it'd just mostly be the diehards that are going to be on this, considering it's July 4th weekend. But let's get through it and let's just start. So I don't really have an agenda. I mean, I have stocks that I can go over, but we can just jump right into it. So the first question: how will oil prices affect the stock price? Depends on the stocks, right? I mean, if you're talking about energy and the energy stocks, hey, Ro. So if you're talking about energy and the energy stocks, I mean, the XLE, you could be able to literally look at this and go, and let's clear all this up so we can really get into this. We'll get rid of all this. But if you look at the XLE, right, you can get an understanding for oil. I mean, it's really that simple. What you'll see though is there's a lot of stocks that are heavily tied to oil prices. So if you're asking which ones are going to get affected by that, you know, to that, but really, like, look, if you're worried about oil and which ones are going to get hit, this is going to get slaughtered. When oil comes in, MRO will get absolutely hammered. Uh, when when oil comes in, this will get absolutely hammered. So it really is just dependent on the company and then how much they're tied to oil. Some companies will actually go up on it because a large portion of what they do is tied to oil. So, like Goodyear Tire, when oil goes down, Goodyear Tire goes up because 2/3 of their profit margins are tied to oil for tires to make tires. You know, you learn this stuff after a while. So let's get into it. Space, sure. Let's do space. So space, what you're going to find is, let's just get on these indicators. And space, what you're going to find here is that you're really seeing just that range, right? I mean, we talked about this the other day. I hope I was clear when I was stating that, look, they're giving you a gift. You got a gift. So like if you, let's get rid of these for a moment. If you went home and you were long this. So in other words, you come in right here, right? And then you're closing here. And then you come in the next day and you open here, right? you've been handed a gift. I mean, I tried to make that pretty clear. And this did exactly what could be. I mean, it could always have gotten worse, but this is worst case scenario. I mean, it just literally sold down the whole way. It's very clear that they're telling you that the big move is out of it. Now, if there's a delay for any reason or anything happens with this launch, you're going to see this get absolutely hammered. Right now, you have this little wedge that's kind of fitting down here too. It's trying to make a little wedge there. Hopefully it holds here, but I would not be long this. If anything, you'd be looking for trades into this area, but that's really all you'd be looking for. There's no reason to do anything else with this. So any names you guys want to go over or girls want to go over? Start throwing them out. We can go over them and taking a look at them. From the top 10, I really like this name. I think this name has huge potential. I really do. So I think this could be a big winner. You see this 371 line? You have to watch that line. I mean, that's really the big thing. I was asked about this earlier today, and you got to just get through this wick. Once you're through that wick, you should be good. So I don't need the trends, but just look at the, oops, keeps giving me those. There we go. So you haven't really been breaking this 8-day moving average at all on this. Your volume's really light, but this space really is setting up. So this is the consumer discretionary space. Just look at this. I mean, this area versus some of the other spaces that you're out there sector-wise, this is setting up to break. And this has a pretty big range that it can go. So we might start seeing some more stocks in this group. You go from here up to here. It's a 5% move, but it's substantial for stocks. I mean, so that's the consumer discretionary, which is your retail, automotive. And you could see, it's the XLK and the XLY. I mean, it's retail and consumer discretionary, I should say. And it's technology that's moving. So, yep, let's just keep going. Hey, Eric. All right, Airbnb. So Airbnb is just not doing what we wanted it to do. I actually have this one, and I have it in the newsletter, and it's just, I have this up here twice. We'll drop this down, and we'll get rid of all this and just talk about it. We'll move this over, open this up, drop this down, and get rid of these. So it's just not doing what we need it to do. And this is all these wicks, right? See all of them? 153.74, and then you can't hold it. You're basically setting up for an evening star pattern to complete, but you didn't. And it's just kind of hanging in there. I mean, it's just really sitting. Like if you look at where that's sitting right now, right? Just go to this range and drop a line and move the line up. I mean, you're just really sitting on the top of this. This is not the best action. I mean, for me, what I'm going to be using is if I close below my 21, I'm probably not going to use the 8. I'll probably use the 21 day. And if I close below it, I'm just going to get out of it because I didn't close below it all here. And, there's something going on with the company in regards to their earnings. And, more people are going back to hotels, it looks like, when you start looking at these numbers. And I don't know if that's starting to be priced into this or not, but I just have to look at the stock and see what happens here and then make my decision. It should hold these lines. It should not be breaking these levels. And, these levels are key levels. I mean, you're talking about the 50 day that you're now below. You could break the 21 and you're below the 8. So if you break below the 21, you're below the 8, the 50, and the 21. That's not something that I'm going to stay in. So that's really what I'm going to watch that level. And if it doesn't hold, I have to get out. So everybody wants to do Wish. Let's just go down the list. Wish and CCIV. You got it, Stefan. So let's do it. Wish. Okay. So this just looks awful. I mean, there's just really no other way to say it. And we're just, I was watching somebody else talk about it today, and it's like trying to put lipstick on a pig right now. It's got some real issues. I mean, there's really no other way to say it. So let's look for some bright spots on it. Okay. And see what we can find. But what I would do is I would look at it from here for a perspective. Okay. This is what I tend to look at to give me a more global perspective on what's going on, right? This gives you, if I have at least 30 days on a weekly and I do on Wish, that gives me, it's almost like looking from an airplane point of view on what's going on, right? So this is what you're saying. You're saying 15 has been clearly rejected. Okay. You had a wedge line here that is broken, which is not great. So I think what you need to see is also understand, what is this pattern, right? From us that know these candlestick patterns, that's a bearish engulfing pattern. So I have a weekly bearish engulfing pattern. Now let's go and throw some indicators in. Okay. This is the single greatest red volume I've ever had. So if I was a betting person, which I am, I would argue that this is probably going to 10.5. At a minimum, at the most, you're probably going to 10. If you break 10, you could be going a lot lower. So I'm not really sure what the reason is for it. Now, that said, you broke your 21 day, which isn't good. Your 8's coming down, which is not good. And you're sitting right on your 50 day. So if I was long this and I broke the 50 day, which is, let me give you an exact price, 1133, I would be out. I would be out. And if you wanted to buy it back, I'd buy it on a higher high move. I'd buy it on something like this, Stefan. And for everybody that's interested in this one, right? So if you go here and you clone this, you're going to see a ridiculously, and I can just tell by looking at it, you're going to see a ridiculously close line here that you're not going to really want to play with until you break. Like you don't want to short it here, but look, I mean, this is where you're at. You're at the low of the breakout bar, right? You're at the low of all this. So you need to hold here. You need to hold that 1151 and you need to hold this level. If you don't, you're going to have an issue. So CCIV, let's put this up here. That didn't really help. There we go. So here we go at CCIV. Here was our level. We could pull this down just a little bit, right, to here. So everyone can see where that is. And we hit there. I'm 2788, and we got over that. We'll leave it right where it is. We broke out here, bounced off the 8 day, opened up the next day, went higher, went below the open, and that was it. Right? Now you're just sitting here. So this is not broken yet. This is just here. Let's look at this so you can understand this. It's not broken yet. It's not great, but you have a channel here, right? And if you, I don't have to do it that way. I can just do it this way. It'll just be easier and faster. So you basically have a channel right here. Okay. And what you're seeing is you're just bouncing throughout that channel. Now you broke above this higher high, you broke above this one. Selling back down is not my issue. Your issue is going to be if you start getting through the 8 and the 21. If you start getting through those, that's going to be of issue. Until then, I think you're fine. I mean, I'm not chasing it here. I don't like the action. I don't like what happened. But you saw it with all these names, didn't you? Right? I mean, they all have the same exact chart. It doesn't mean that they didn't go up. I personally think, I'm just going to give you a longer term outlook. I personally think that anything that's not making real earnings is going to get hammered. It's just a way that we're trading. I think those kinds of stocks are going to come in. If you don't have a lot in earnings and revenue growth, I think these stocks are going to get hit. I think which ones are going to start doing better are the larger cap names that are throwing off a ton of cash. I think that's where we're going here. It seems to me that that's where the market's telling us we're going. We're going. So, and I'll get into these, in a moment. But let's just look at the big cap names for a moment. This is Facebook. Okay, that's setting up. You have a flag going on there. Amazon setting up, right? All these names, all these huge names. They're Google. I mean, they're all. It's all over the place. Apple. Microsoft, right? It's very clear the money's going. This is set to go parabolic if it breaks this tomorrow. So that's where we're going. And I think it's going to be harder for the smaller cap names. So just to point it perspective out for those that are with us that follow in the newsletter, I'm just going to throw this out there. I'm not giving away any great secrets here, but DDD is a smaller cap name, right? Let's look at this weekly. Okay, that's rejection. Right? That's one that we were in. That's rejected. It's a smaller cap name. Fubo. So here on the daily. Okay. Let's get rid of these indicators. It's rejected. It completely rejected. These are the same kind of patterns that you're seeing in NIO and that you're seeing CCIV, right? And these kinds of names. It's the same exact pattern, right? And what I'm saying is just be aware of that you are seeing a rotation into large cap names. And I don't know if these are going to hold or not hold, but my sense is that they're acting like the other ones that just started coming in. So just keep that in mind for everyone. Let's just keep going through this. I saw your question, Susan. I'll get to it. I just want to stay in order. So Wish, we did. Let's do TTD. TTD, I like. I wish it would go higher. I don't know how else to say it. It's just not. It's just sitting there building a flag. And my hope is that it holds. And if it doesn't hold, I'm going to get out of it. I have a position in this. That 74.11 level, I'm looking at that and it should not break that. It should not come back down into this. And if it does, it's time to go. It means that I could come back down to this 200-day and test and then build up again. And frankly, I don't want to be around for that. So I would get out of it if that happens. But I'm expecting software to kick back in. I just wish it would actually kick back in. It's kind of trying here now to get back up to this level. That whole space to me just looks like it's ready to run, but maybe it's going to consolidate or pull back. So we just have to honor the process and watch what happens there. DIDI. So we can get into this. Just disclosure. I have a position in this with what's going to happen, tomorrow, whether we gap up or gap down. I've been through this. I was telling someone earlier, I've been through this, 100 times. I've probably been through this 1,000 times. Like this just happens. And there's really not much you can do about it. You can try to plan around it. You can say, I'm not going to buy Chinese companies. You can do whatever you want. Doesn't mean that you're not going to get caught in the next thing. You just have to act on it and have a system. To me, and looking at this, I'm just going to be very blunt about it. Like it happens. And there's nothing you can do about it. Now, you really don't know where it's going to open. If you want my opinion on it, I can tell you based upon SoftBank's move and Tencent, their move, and some of the others that have stakes in it, that it could open down more than 20% is what I think it could do, which is 2 points. I don't know. I really don't know where they're going to open it. I know it's a $90 billion company with 555 million people that use it, and 15 million people are employed by it that drive for the company in 15 different countries. So it's not going away. They don't have Uber in China. They have this. So I don't know really what they expect everybody to do. I actually think this is one of those things where everybody gets shaken out, and then they just happen to come to some type of agreement. But let's see. We'll see what happens tomorrow with it. But I would tell you that if you break this 14 level, it's going to be very interesting to see how the investment banks act, and they should step in. They frankly should step in to support it. Now, whether or not they do, I really don't know. And some people were asking about when to trade it. I'm just going to get off this topic now. You know, I'm not a big believer in trading these stocks at 4 o'clock in the morning because you have access. There's like 4 guys there sitting there waiting to pick you off at 4 o'clock in the morning, you know, taking it down to a level that's going to horrify you just so you get out of it. Very rarely have I seen people close positions at 4 in the morning and that be the best move that they've made of the day. So I would argue that you at least want to wait till 7. And frankly, I think you want to wait till the open and then make an informed decision. And I wouldn't be surprised to see the names that own stock in there bounce by the end of the week. So let's just keep going. Dave, you want to go over CSX? Let's do it. So CSX, let's get into this here. Perfect. So CSX, I mean, honestly, I like this space. Monster company as far as the way that it's run. The gentleman that took it over that actually passed was just an absolute genius as far as a management style. But that doesn't really fit there. Kind of fits here, doesn't it? So I like this. I mean, I do. I don't think you're going to have a lot of interest in it, but I like the chart. I mean, the biggest thing for something like this is realize that this is a value company, and a lot of people are not going to buy this until they feel that they have to. So you really need to clear your 50-day on something like this, which really gets you to 33. We'll call it 33 and a quarter. And that kind of lines up a little bit with getting above this anyway, which you really need to do to confirm your breakout. So getting above that level and then getting above that 50-day, that's really what I would focus on. Let's get rid of these others so we can just see it a little clearer. And we'll close this. So I would get above both of those before I would enter it. I do like the increase in volume. What you'd be looking for is for it to get to the high of the wick, right? You'd be looking for it to come back to this level. And considering what's going on with oil and how everybody's transporting oil, I would expect this to turn. I mean, you hit a support line right here, right? I mean, you can see this probably. I mean, you hit that support, and you bounced right off of it. So I like the idea. It's just going to be a slow mover. Let's do Lowe's. Fernand, I saw your question. I will get to it. This was one that we were in. Let's remove this. I actually think that you're going to see a bounce in these names. You know, a lot of them got hit really hard off their lumber exposure. And let's get rid of just every annotation here for a minute. We all know this is Lowe's. I just want to clean the chart up. So really what you're going to be watching is this 50-day and how it responds to that, because this is a big institutional darling. Like they love this name, institutions. There's one that had an enormous position in it, but you see how that 197, you're having an issue with it. Just be very careful there. You have an issue with this level right in here. Now you're getting above this, but you're going to want to close above this before considering it. But if that does happen, you're at least going to here, right? Because that's really where your wedge line is. So you can go to 202, and then, of course, this is going to be an issue. And then, of course, that's going to be an issue. But get above that 197 and then go from there. That's what I would do at Lowe's. JNUG. So, I mean, this just looks awful. Like I'm not going to spend a lot of time with it. Like if you're in this, be concerned. I mean, here's your biggest concern for me. You see this cut down here, this low? The fact that we didn't take that out and then shake everybody out leads me to believe we're going to push up and then come back down. What is this? The miners? Yeah. I mean, this is not looking good at all for them. Not even a little bit. This is not something that I would buy. I would avoid this. If you're long this and it takes out that low, I would be out of that, Stefan. The breadth across the board is fairly decent to this question. So it's fairly decent. Take a look at the amount of breakouts that are in that space. Dick's Sporting Goods, ASO. I mean, we could just run through the names of them, right? I mean, just across the board, right? These stocks are just, they're on fire, that whole sector. Like if you want to talk about breadth of a sector, it's almost probably the breadth of this is probably better, frankly, than what I'm seeing in the XLK. So to answer that question, Oracle. Sure, let's do Oracle. Okay. So with Oracle, what you're seeing is you're gap filling, right? This is classic Oracle trading. I'll give everybody like a really quick tip on how to trade Oracle, right? It's been like this, and I hate to say it because I'll start laughing again because people made fun of me when I said it too much. I've been trading for 2 decades, and the one thing that is the one consistent is understanding pattern recognition, right? This is Oracle. Okay. These are the dates that came out with earnings. Comes out with earnings. What happens the next day? It sells down. Okay. Comes out with earnings, sells down. Comes out with earnings, sells down. Right? I mean, you can see it. Comes out with earnings, sells down. Comes out with earnings, sells down. It is, you can set your watch to this. I don't know why it's like this, but it sells down every single time almost. There are certain times when it will not. But what Oracle does do is respect its trends. And to me, when this breaks down is when you buy it. That day, that first or second day is when you buy Oracle. Now you have a gap fill. So let's get rid of this. But remember that in the future, wait for Oracle to come out with earnings. Usually it gaps down. 1 to 3 days later is your bottom, and then it goes higher. I mean, you can go back a long period of time, and for whatever reason, that's how it trades. So let's just go and look at this. Okay, this is your gap now. Let's put you right where you are, okay? You see that gap? So what you're going to have to see here is you're going to have to get above this, and you really got to get above this little line to see it go higher. And it could, but you need to get above 82.50. But frankly, Susan, the easy money's over. So if you're in it, great. If you're not in it, you know, to me, the easy money was here, and just leave it alone. And it, you know, it just trades. It's just an easy trade. So I know, Bo, that's why I keep laughing about it, because I actually get people that I say for a point of like, when you see things for so long, you can kind of explain it a little better that way. But someone had a comment once, it just made me laugh. Let's just keep going. For this year, can you take a peek at DDD and BBW? So DDD I've done. Let's do BBW. So Build-A-Bear has just been a beast, right? I mean, just been a monster. So I'm not really sure what all the excitement's about. Now, I had this on a watch list. We came down, cut, tried to rally, failed. And now we're closed below this line, which doesn't, well, we're sitting right on it, which does not excite me. And what it did do was give me another day of, or another week of this long red bar, and I'm building a flag. So I have a bear flag. So for me, if I was in Build-A-Bear, I would need to get above the opening red bar there before I would consider it. And all that's really going to do is get me back into this wick. And we already know what, that wick is price rejection, right? So what do we have to do there? I have to get above 1790 really before I even play with it. So, you know, that's how I look at BBW. Let's just keep on going. So GDRX, proud, but do I stay or do I go? Anna, we've all had our moments of not being proud. There's, you know, it is what it is. You move on. I don't know your cost on this, but this, I mean, these levels have been in here for weeks. I looked at this previously on a breakout. I was very interested in this because they have their business is a cash cow. So they've got a great business, but it's the stock's not reacting to that. I'll leave this down here for now. There's no reason to go higher. So these lines have been in here for months. So you can just see how we're respecting this line up here. And right now we're sitting on major support. So just to be clear, this is major support, right? This is where when we fell and got exhausted, look, see all this selling? See this all here, right? And then here, right? See these levels when it hits this here? See when it hits here? So this is major support. There's really, I can't be more emphatic with it. So what you need to do is understand that. And I don't know where you're in it. It's none of my business. I would just tell you that if it broke 33.76, I know that I would be out. I know that I would be selling. And we can throw the 200 in, but there's not enough data for it. So it doesn't make sense to throw in the 100. You're below the 50 and the 21. That's all you need to know. You break this line in the sand, 33.76, and I would be out, Anna. It wouldn't even be a thought. UAL. UAL's it's just blah. They're just kind of hanging in there. I don't know that you have to be in any big hurry here, Emily. Like there's probably a trade there, right? So, I mean, I'll show you the trade so you can see it if it's something that you want to enter, and maybe that's what you see, right? So you see this, right? So one part of it is that if you break out of this wedge, you may head back to this level. So there might be 8 points there. Now, if you come across here, look, right? See how you're here, 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 right? So essentially this is a support line right here going across. So you have support and you have this. Now let's overlay the indicators. Yeah. I mean, maybe the 8-day might give you some indication. Yeah. You got to get through a lot of stuff. You have to get through your 8, your 21, your 50. I mean, I understand what you're saying. I think you're looking at the chart. I think if you drew this up, it's great, but you got to be careful here because then you have 55. And I would always, before you start investing in singular names, just, one thought is to just kind of look at the sector and see how that sector is going. And right now you would see this is Jets, and we can see the symbol right up here. So you can see that this is Jets, and this is just, the global Jets ETF. I mean, it's very simple. Does that look like something that you'd want to buy? Probably not. So, I would just stay away from airlines right now. I think that they had a very large move already. So, a take on tech, CrowdNet, DDog. I don't think they're getting toppy, Jamie. Here's the question. I try to throw these up so everyone knows what I'm saying. And I love the SpongeBob. But I don't think we're getting toppy. I mean, here, look, I was looking at these this weekend because I have positions. This is Crowd. Okay. That's Crowd on the weekly. Doesn't look toppy to me, right? I have a rising wedge, which could end badly for me, but this is the monthly on Crowd. Like, I like that. I like that a lot. I mean, to me, that has a lot of upside. So to me, counting from here to here alone, just counting that flag move, right, gives me 75 points. So, 325 just off of that. And breaking out of a monthly flag is pretty significant. So I like that name. Now, I've been in others that are they're not acting right. Like FSLY is not acting great. It just does not seem to be able to find any footing after that breakout the other day. But let's get into some of these other names. So like DDog, right? That looks great. I mean, to me, it looks great. We came down, tested, undercut that test, right? And then rallied. You're setting up to break if you break this. And then we can overlay this with some other bells and whistles, but you can see that line straight through it pretty much, right? Like where we're at. Here, I'll just draw from back here so you can see where I'm at. So you could see how this was support and resistance in that level, how many times it hit there. So this is a big level for it, 107, and getting through that would be enormous. So I think that that's something that you have to take a look at. And let's just go through this, right? And really look at it. I mean, my volume was awful, but volume, I try not to do this. I try not to make excuses for volume, but even I do it. The volume's either there, it's not there. This was your break. See this rising wedge here on the weekly? See your rose here? So, and then what happens, right? What's your breakdown bar of that? This is your breakdown bar. Are we above that? We are. So this is telling you that this move down has been negated. Okay, that's what it's telling you. And right now, I can't really draw a wedge line here because there isn't one because I keep hitting higher highs. So right now, this is on target for what? 120, 118. So I like D-Dog. I think it could work. I think that whole space is completely underrated right now compared to what we could see. I really believe that. So let's see what else we have here. QRVO. And Tilray and Asan I'll do next. QRVO. I mean, I was in this for a trade. Looks like I got stopped out of it. Let's pull this down to here. So you can see this flag, right? The question is, do we have any volume with it? And we just don't. You need to see volume on the breakout or you're heading for one of these again. So which you don't want to do. And, this should go. But I mean, this is a fairly large company. And if you notice this pattern, let's get rid of this for a moment. If you notice this pattern, it's very similar to some of the other large cap stocks that haven't broken out yet. So that would mean that it's probably going to trade like them, right? I mean, if I showed you this pattern, just to put this in perspective on where my head's going with it, if I was to show you this pattern and say you're looking at Amazon, right? I mean, they're eerily similar. I don't know why I have this on so many times. So, but they're eerily similar. So I think that this is going to move like the large caps are going to move, like the bigger names. And I'd be watching for this, and I'd be watching for that breakout. But you really need to break out of this. And to do that, you're going to have to get above this wick, which is 199. So that's really what you're looking for there. So Asan, I like. I mean, it's just very difficult to tell anybody to buy it besides the weekly. I mean, you're really just buying it to trade it up and try and stay in it. It's going to be kind of hard to stay in this one because of the move. Like this was your breakout. And, I always say this, like the first mouse, gets the trap, second one gets the cheese, but it's not always true. And that's why I'm saying it's sometimes you're better off just getting stopped out, like on net the first time, and then you get in the second, you get in again. Because the first time this broke out, it did not look back, and it just took off. So now you're chasing it off of this base, and I don't really go for overextended. What I will do though, instead of saying overextended, I will say that when I start getting 50% or greater off my 50-day, you need to become concerned. So 50% or greater, you can be concerned and just realize that a pullback is nothing. Like a little pullback would be nothing. But that 8-day, and you could even use, if you were in this and you were trying to figure out what to use, a close below your 8-day moving average is your stop. I mean, you can see how since this run began, that has not been an issue for it. So that's what I would use. Tilray has just been a little bit of a disappointment, to say the least. So let's get rid of these indicators. You're just riding this line right here. See this line? You're just riding it, and you need to break it. Everyone's all excited about they're going to, federally do something with pot, and that's great. it doesn't seem to me, it seems like if that happens, it's going to have a day up and be priced in. For whatever reason, if you're interested in that space, and I didn't, I keep waiting for it to have follow through, but we have 1 wick, 2 wick, and then we open there, reject, test the support level, and then go. I like GRWG way more in that space. Let's just keep going through here. JKS, lots of crossing averages. Yep. And Disney and CELH. JKS. So that's a gravestone bar. So usually that means that the top is in and that we're going to go lower. It doesn't always work. It's just a signal. And essentially what this is complete rejection in here, right? So that's what we know. We know that wicks are price rejection. So we opened at the low, closed right there. So it makes a little gravestone, and that usually signifies a top. Now, I could see that because there's nothing below it. But what would be interesting is to see if it holds. If it holds, you then have this pattern that we need to discuss, but we have to work up this bar. So let's overlay the indicators with it. Yeah. So you're right at the 200-day, and you broke the 200-day right there, right? So I would be very apprehensive to step in this right now. I would want to wait and see and let this build. You could come down to the 8-day or and kind of go from there. But Emily, you could see this test 43 fairly easy, like going through butter. It definitely could. So just consider that. Disney. Let's do Disney. Okay. So I have a ton of stuff on here. Let's get into it all. So you've been having this downward trajectory, and it's just been going on. Look, you have to think about it this way. This is consumer discretionary. It should be going. It just hasn't yet. But with that said, notice this. Let's get rid of all this. Okay. We're going to keep these lines in because they haven't changed. I don't think this goes back that far, but we're going to say, nope. So you have this line right here that you're respecting, and you have this other one right up here. So we're getting tighter and tighter throughout this. Now, if you overlay your indicators in here and you open this up, you can kind of get a sense of what's going on, right? The 21 and the 8 are ready to go. The 50 is being rejected. So let's just look at that, and let's get rid of this and the 21, and let's just get rid of all these lines now just to make it simple and see what's going on. Look at the 50-day and how you're rejecting it over and over again. Every time you get to it, you're rejecting it. Up here, you rejected it. Here, you rejected it. So what that means is that you have an institutional seller, okay? And if you have an institutional seller, you're fighting the tape. There's no sense in that. Swim with the tide. So you need to see, especially with names like Disney, that's definitely an institution. There's no question about it. So, and they're just selling every time it gets there. Now it's tighter and tighter and closer to it, so that the chances of it going over, are greater. But you need that person to stop doing what they're doing before you even get involved with this. And that could be something like 181. Like I would want to see significant close over that. Like I'd want to see 181 before I get involved with it. But then it could trade right back up and get right back in this channel. So. And let's just keep going here. What else do we have? Oh, that's great. Yeah, Anna, that's where your stop should be. Well, your stop should be lower than that. You should let it break. If your cost is 34.60, Anna, if your cost is 34.60 on that GDRX, I would use that as your stop. Hey, Tom. All right, SELA. I knew I was forgetting one. So All right. So this is from, we have this from the newsletter. We're in cheaper, $62. Let's just get through this without all the newsletter stuff for a moment. So I really like this and I really like the action. The question becomes, is it going to hold? Now, if it breaks this line, I think you have to get out of it. And the only reason I say that is because it's had a big move on a secondary in a short period of time. Okay. And since we broke out, we haven't closed below the 8-day. We're giving it to the 21 and the support line. So we're giving it a lot of leeway. But we hit the 21 on Friday and we look like we rejected it. And we also hit this line and we rejected it. You need to hold in here because if you don't, this can come down and retest these levels. And you're not going to really want to be around for that. Now, the other thing I would say is, and I do like the name, I really do. I think it has the potential to get back to this level. But if it breaks here, you need to get out. But also understand something. You know, this was our last earnings, right? And this was the other earnings. Like they don't really have they're not really fully act together yet, earnings wise. So just keep that in mind. Like they seem to be having some issues on how to present or execute. So it's coming up, I think, in about a month, but I don't have the exact date. So, you know, just be aware of that. It could be something where it sells down on that, but unless they're stellar. But I can see how this is shaping up. Like here, look at this. Well, hold on a second. There we go. So you see that now? So now you're starting to form that. And so what you need to do is just need to watch that level. You can see how you're just holding right in here and you're not breaking that wedge. So now you come back down, you test support. And if you can break support and get through that 8, then maybe you can go again. I mean, that would be nice, right? But other than that, you just have to watch that level like a hawk. Because if you break that level, it's going to be an issue. Easy money if CRM breaks out. So I think CRM, like, look, the time to buy CRM, I mean, I'm just going to walk through it, right? Every single time this thing comes out with earnings, they sell down. I mean, earnings sells down, earnings down, earnings, even though it gapped up, sold all the way back down, right? The only time we didn't is like here. So, you know, buying this on that break, I'm not going to be a big proponent of that. The only reason, I'm going to show you why in a moment. Let's get rid of these. So the reason I'm not going to be a big proponent of that buying is because I have no volume here on the weekly. I've been watching this one because I love the name. I mean, they're it, you know, they really are. But you know, you got to get above this 251.23 and you need to see volume. You need to see real volume here for me to believe that it's going to push. You're better off buying this after earnings when it has those days that break down. It's just one of those, for whatever reason, that's how it trades. But it could go. It could finally, you know, start acting like that. That's a clear breakout, but I just have no volume. ARWR, this looks like something that came out with earnings and that they were not stellar. So how you play this is your line, right? And then you have to kind of realize, like, this is the easiest way to play these names, okay? You let them develop, which we've done now. If you're in this and you were in up here, you should already be out of it. If you're not, you need to wait for it to break at this point, I guess, is what you're looking for. But if I break that 60, it's telling me I'm going to go lower. Was this an earnings event? No, it was a news event. So you're below the 200-day. What you really want to see is this undercut, this line, shake everybody out, and then go over that bar that undercuts, and then look at getting into it. Or the other way to play it is for the 69.46, 69.50 level, right? What you need to do is get yourself up there and then get involved in a gap fill. But that's how you need that's what you need to do there. So that's how I would play that. Is APPS a great buy? Tom, I was in this twice, and one time I think I made a little bit, and the other time I think I lost a little bit. So I think it was like a break even kind of day on it. Let's just get rid of all of it. The issue was I didn't understand why it was going down, and then I found out afterwards why it was going down. So I'm very curious to see how it opens. It's a very simple trade at this point because all you're really going to use is this. And if you take out the low, you just have to get out of the way because you're probably coming to here at that point. And it could still happen. But you may have a bounce play here. So I would watch this open. And you're really only going to bounce to up here. I mean, before this news even hit, you were at $80. So you're not looking for, I'm not saying it's going to break all this. This is going to take some time. So I wouldn't be in a big hurry there. But I like it. Could you look at QQQJ? Yep, sure. So see your volume here? This is why I'm not a big proponent of trading this one. I just don't have a lot of volume in it. I think you're fine. I mean, if you're in this, great. If you're not in this, there's different ways to play this that I would be looking at. So, I mean, it's kind of telling that the NASDAQ next gen is not even close to up here and where the Qs are, right? But if you think about it, that's because there's fees associated with it like this, right? But this is on a tear. Okay. I mean, this is on an absolute tear. So I would argue that if I wanted to have that kind of exposure, why not just buy this? If I just wanted index exposure, I could just buy this. If you wanted specificity exposure, which is maybe what you're going for here with just those 100 names, maybe they're not the 100 names to own. There's some other ETFs out there that look really good. I mean, this is one that we've been playing with. We have to see how this holds, but it looks to me like that's going to get through 45. So QN Lens SQBG. Yeah, I don't know what's going on there, NASCAR. I saw that. I definitely saw that here. Definitely. I mean, look, you're speculating. Maybe they go, maybe they don't go. I really don't know. I mean, I can't tell you. I can't look at that chart and tell you anything. What you would have to do is look at something like this. And then you'd have to just look for pattern recognition when you're playing them, right? You'd have to look for breaks like this and then overlay that with indicators and see when your volume kicks in, buy it here. That becomes your stop. And then just move your stop up every 15 minutes. I mean, that's how you have to kind of play those. I mean, you just don't know when the story is going to end. And you can use a 5-minute or a 1-minute chart, but you just don't know when the story is going to end on that. So CRM we've done. Oh, you're welcome, Lucas. Thanks so much for answering, Crowd Dude Dog. The multiples, but Jamie, here's your question. Like the multiples, they are higher than they've ever been. Who cares? They can go higher. Like, someone was talking to me today about like the Qs again and how it's over the 8-day and what does that mean? And, I don't care. Like when people talk about, oh, the PE is this, or this is the price sales is this, is it going higher? Does the chart look good? Right? I mean, that's how you have to think. I don't know when this ends. Like I have no idea when it ends. I can only control what I can control. So to me, if this is trading at, if this is trading at 100 times earnings, I don't care. Right? As long as people are buying stocks that are trading at 100 times earnings, they're going to go higher. You just have to get out when the party ends, right? And it always does end, but you just need to be cognizant of that and just have a plan in place. So let's just keep going. All right, looks like I'm caught up. Point of control indicator. Where can you find the point of control indicator? The point of control indicator, you know where the shelf volume is? Yeah, I mean, I could show you that on a chart. Let me grab one real quick. The JIT News Catalyst. It wasn't an image right prior to that. People were looking at MRIN, right? Like just out of nowhere. I mean, you have to understand something. If you think that like these Reddit rooms are not manipulated at this point by like hedge funds that have huge positions in these names before they get people to pump them, I mean, there's a whole other market going on there that people aren't even thinking about. But here you are on the 24th. Here you are on the 25th, and then this is when everybody starts coming out and talking about it, right? So you could see out of nowhere, people start buying it, and then boom. They just find the ones that they can squeeze. So what do I think about? I think I think that'd be great. I think that that's actually going to play out very well for them. I really do. I think that this is going to play out very well for them. Hold on. Let me just throw this in. So here it is. I mean, you're holding the 50-day. It's not, it's not really doing anything that's, I mean, you're there. It's kind of roughly drawn. It should be a little bit stronger. So I don't see any reason to like jump in it right away, Emily, but I don't see anything wrong with it either. You're holding this. If I broke this, I'd get out of the way, especially since you're on the 50-day. But I long term, I like the name, but it's just, see how you have these and then they get smaller. Here, let's get rid of these indicators. See how you have this and then they get smaller and then they get smaller. You want to watch stuff like that. It's telling you that you're contracting, but I don't see a catalyst here that makes me want or tells me that I have to jump into it. So, I'm going to do BSQR, shop and affirm. So let me just go through this. You mentioned, yeah, I'll throw it in to show you it. I don't know if it's on TradingView or not. I don't use TradingView. I probably have it and just don't use it, to be honest with you. I have a lot of different softwares that I keep just to have, but that's not really one of my focal point ones. So let's just go to BSQR and see what's going on there. So again, like names like this, I mean, you just literally have to play them for what they are. They're pump and dumps, right? This was the pump and you either got out or you didn't. And now you're sitting here with it, right? And if it breaks if it breaks 388, it's going to come in. I mean, that's the thing you have to remember about these names. That's what you're dealing with them, right? So just keep that in mind. I mean, it's not something that I would run into. Shop I actually like Shop's got a decision to make, and I think it's going to be higher, but I'm biased. I don't like how it's below the 8-day. I'm not a fan of that, but I keep testing this level and not breaking it. You see how I'm holding up above here? Right? So I'm holding this level and I'm forming a wedge there on this break. So essentially I still have a bull flag. And you have a ton. Let's pull this down, pull this down, pull this down. So you have a ton of space up here for this to run. I mean, if you extrapolate this out, even right now, here, look. Just now, it could be $1,800 and still be in the upper channel. So I really like the name. I'm hanging in there with it, and I'll honor the stop. We got in this a little cheaper in the 13s. So if I only wind up making 100 points, then that's it. And then I'll just find another entry into it. But I do like the name. I really do. Dan, I'm still a huge fan. ARFM, you got it. ARFM. AFRM? Maybe I spelled it wrong. Yep, spelled it wrong. So this was one where I must have had this in already. So let me just do this with it. and get rid of volume by price. And then we'll click over here and I'll throw it in on that side. Okay. So just for who's asking about this, let's just go over it for volume of price and why we're looking at it. So this purple line is point of control. This is where the majority price of all the stock is. Okay. Not where all the volume, not the volume price, but just where the majority of price was traded. That's where you're at right now. Okay. So that's why those, to me, those levels are just as, if not more significant than volume, VWAP. And this VWAP right here is VWAP predicated upon this. It's not VWAP. It's complete, which could be the same, but it's different. And it's just, you just have to understand that. You know, you could put VWAP anywhere. I can put a VWAP on this. I mean, you can put them here. You can have hundreds of VWAPs. So you just have to understand that and use the ones that you find that have the best value. So with a firm, I mean, this is a great, very interesting product. I'm surprised it's not doing better. VWAP would get you up to here, 83. I don't see any reason why this eventually can't break out, but it's got to get above that point of control line. You can see that purple line right there, right, Anna? So you got to get above that before it does anything. So CI, let's take a look, Brandon. Let's see what's going on. I would avoid this. I mean, here's your volume shelf right here. Here's your VWAP was rejected. Your point of control was rejected. You're below the 8, the 21, the 50, and you're heading to the 200. So, I mean, it's a little tiny name, but I would be very cautious with that. CMCSK, and you're welcome, Dan. Yeah, I'll do NVIDIA. I have time. CMCSA and NVAX. So the question becomes, what are they going to do? See how the point of control is up here versus here, and you see the shelf. It just shows you where the real volume is, so, or where the majority price is. And when you get through that, you do sometimes see pops. The only concern I have with buying this breakout is that breakouts for this name, for whatever reason, usually do not work. And I'm not saying that's a reason to not buy it, but I always look at patterns. Here's a breakout, fails. Every single one of them, they fail. And then like you buy it when it gets to the 50-day, basically because it's more of just a value name. You know, it's just going to be a cash cow. I mean, I'm a Philadelphia guy. I'm from Philly, but I'm not there now. But I mean, they're enormous and their scope is enormous and they are literally a cash cow. So, and you have a channel that's running up here that should take you substantially higher. Here, look. Right. I mean, this is telling you that you're going higher. I would just say that, you know, just be careful with it and see some volume. Like if I had some real volume coming in, maybe I'd be more interested. Also, you don't know if they're going to do something with Viacom or Roku. And if they do, what that's going to do to the stock price. And there's a lot of rumors floating around on that right now. So I like this. I like this one more. But I like this. I just have to see how this couple things play out with it. Volume is just completely dropped off, and we have yet to make a higher high since we peaked. So let's get rid of these indicators just to clean it all up. But you see these levels right here? We can't get through them, and we need to get through them. No, I don't. Yeah, I don't touch them, but I'm more than happy to answer. It doesn't mean I'm right. It's just I just don't touch them. Doesn't mean that doesn't mean they can't go up and triple or make you 10 times your money. I just they just don't work for me. No, it's not like I've never bought them before. Of course I have. PubM is a complete and utter failure. It's just a complete rejection. So there's not really much more to say about it. I mean, you have one line there where hold on one second here. Just getting some water. But you have one line here, right? Now you have one more here, and we'll throw in the bells and whistles in a moment. You break that. When I point out these wedge lines, like when you're pointing out here is a wedge line, right? And I say it can go to this point, just maybe I should point this out because sometimes I just think people know things. So, and I'm learning how to explain things better, hopefully. So 6183, you see that level, right? If I broke this wick to the upside, I would argue that you're going there. See this wedge? If I break this wedge to the downside, I don't think I'm stopping here. I think I'm going to here. So this is telling me that I need to hold here. And I'm right on point of control, okay, which I'll start using a little more since I do talk about it. And I do think it's very important. And I'm right at the 21 day, and I'm right at this wedge. It'd be a great place for it to reverse. So if you wanted to play it, you got to see it reverse higher than the 50 day and get through that. But other than that, I really wouldn't be in it. It's not acting right. So, okay, you got me for another 10 minutes. Let's just keep going. See you later, Anna. CRUS. I mean, one, I love that pattern. I absolutely love that pattern of Cirrus. So it's funny. This is one of the first semiconductor stocks I ever bought. I won't say 20 years ago, though, because I say it too much. But it's funny looking at this name and thinking of how long it's been around. Wow, it's been around forever. So here's the thing. See this little shelf up here? That's where you're being rejected. See this volume shelf? That's where you're having an issue. That also correlates right with here. So I would just be careful, but this is what you're looking for. These are the types of charts that you're really looking for. When all these averages start pointing up, it just creates so much pressure that it does drive them up. But you're going to have some battles along the way. Here's going to be an issue. Okay, that's going to be an issue for you. This one, that'll be an issue. That might be a smaller issue than this. And then you're probably heading back to this level. But I like how they're all pointing up. And I would really like to see some real volume in here for someone to pay attention to it. So no. It's a semiconductor company. They're semiconductor circuit boards. Think like that. I guess that's the easiest way to explain it. VISL. Let's do it. So VISL. You're stuck in here. You got to watch this level. So if you're interested in it, you got to get through this. I mean, very simply, you're playing with these lower price names, which is fine. We'll still cover them, or I'll still cover them. But you really got to get through that 338 before I would put any capital in this, because I'd want to see it break a higher high. So at least I have a shot at getting back to that, that juice and getting it up there. They're two completely different trades. So I mean, to me, like, I think, look, I like the AMD trade a lot. I think this could be an enormous winner, the way that this is setting up when it gets through there. And we're going to have to see how that plays out tomorrow and, during the week. But buying that versus buying the index they're two completely different trades. This gets you exposure to the whole, there we go. This gets you exposure to the whole space, but it doesn't really have the same, return that something like this is going to have. Like for SOXL, I'm just looking for it to get to 48, 50, get stopped out of it. When I like the exit, like that kind of trade is very similar to me to like this, right? I don't know who follows the newsletter that's here or not. Let's get get rid of, I don't know why I have these both here. Let's get rid of this one and this one. But this was one that we bought at like 103, and it was just an easy way to buy the market, right? Everybody was down on her. She doesn't know what she's doing, the whole 9 yards, right? And now look. So it's just a way to buy the market. But if you're trying to get a higher return, you need to be in common stock, right? You can trade the indexes and the ETFs, and they're definitely safer. It's why I show a lot of them. But if you're trying to make money, like trying to get an outsized return, I would look at the AMD more than I would look at SOXL. Thanks, Kevin. So, and let's just do MRVL. And then we want to do AI too. MRVL. So MRVL looks great. Where's my volume? That's my whole issue there. Other than that, I love it. I've been watching it. AI. You got to just watch this point of control level, Anna. You see how you just keep hitting it? You have to watch that level. I don't like when stocks are closing below the 8, the 21, testing the 50, point of control. You got to watch this kind of stuff. I mean, this is setting up a major, you don't know where this goes. See that line? I'd be really careful. If I took out a lower low here, honestly, I'd be gone. I'd be out of this until it figures out what it wants to do. This is very possible. It's very possible. Yeah, I agree with you. Marvel's very interesting. Asan. I did Asan. I'll do it again real quick in HUT. So Asan is just the only way that you can deal with this is to use smaller time frame charts. I mean, it's a classic breakout and it's going to start moving, but it's not going to end well. It's going to end like this. We just don't know when it's going to end, but it's going to end like this. It's going to end where, people think that it's going to go on forever, and it's not. And you're going to get one of these kinds of moves. So you're going to have to accept that and be careful because it is coming. It's just a question of when. You can't go up this much. And I'm not saying not to trade it. I'm just saying use smaller time frames, 15-minute, hour charts, and just move your stop up. But this is very interesting. I don't know what they do. Is this I think this is a Bitcoin miner, right? This is very interesting. Someone brought this up to my attention before. And, I don't really play the smaller ones. I put them in, I'll show them in a newsletter, but I try to avoid them. But look, this is setting up. Absolutely. This is setting up to go higher. So I guess it's going to move. I'm pretty sure they're a Bitcoin mining company. They're going to move just like Bitcoin, if that's what they are. But absolutely. I mean, the point of control, the 8, the 21, the 50, the volume spike would have me very interested in this one. I could see why you're interested in this. Yeah, I don't really, those two companies are just, I don't really, just look at what's going on with their, what do you call it? Their revenues. You got to be really careful there. That's going to end badly one day when people realize what they own. So, you have a business there that has zero barriers to entry. So SEMR, I see what you like about it. You're just wedging and you're holding that 8, but you got to break that wedge and then go up. And then you'd be looking for this 2631. VACQ. Yep. See how you're like breaking out and then you pulled back below this level? You have to watch that. So right now, before I would buy this, it's hard to say on these smaller names, right, that you have to wait for this, but you really should be waiting for that 12.25. If you don't want to wait for that, you really shouldn't be involved in this until you're above 1145. call it 1150 with slippage. And then the best way to play it is if you close below that or get below that, to start using that level as making a determining factor of whether or not you stay in the trade. DPZ. Now, yeah, I like the name a lot, but you got to watch this. You have to flip it now. Like that's the whole thing. Like some of these stocks, like I do think this is going to go higher, but you just have to watch it now, Emily. It's got to get through that. It's very simple. Like, look, I mean, a lot of these larger caps that had the first move, like this is what they're doing. If they get through that and they close above that, they could really move. So but you have to be really fast, right? And you just have to keep moving the stop up. Because remember, when you get through this line, the majority of time you get through that line, you have these bands, right? The majority of time that by the time you're hitting this upper band, here, let me explain it this way. By the time you're hitting the upper channel, chances are you're in the band and you're through the band. So if I go through the band and come back, the probability is greater, right, for a chance to get to the 21 day. You see, you got through here, came back down, eventually got to the 21 day, got through it again, came back down, never got to the 21 day. But it's been respecting the 8. So it's going to be very interesting to see what happens. But it's just been on an absolute, it's been on an absolute tear. So let's see how that plays out, see if it continues. So that's it, everybody. I'm out of here. So I hope that was helpful. And if you need me, just email me or reach out and we'll go from there. Have a great night, everyone. Happy 4th.